Hi, my name's Katie New, and I'm one of the attorneys at the Liker Law Firm. And one of the questions that we hear a lot is whether or not taxes are dischargeable. The answer is that it depends. Today I'm going to focus mostly on federal taxes. The general rule is the more recent the tax debt is, the less likely it is that it's dischargeable. To determine whether or not a specific debt is dischargeable, there are a series of questions we need to go through. First, the tax debt needs to be prior to 3 years ago. It has to be at least 3 tax years ago. So for instance, on March 13th, 2012, 2008 is not dischargeable. On April 20th of 2012, your 2008 taxes would be dischargeable. However, that is only true. They do need to be at least that old. The returns, though, need to be timely filed or minimally prior to 2 years before the bankruptcy. So that is to say your 2008 tax needs to be filed prior to the due date in 2009, or to use the example of an older tax, if you had a 2000 tax debt that was filed on time, that would be dischargeable. If you just filed your 2006 taxes in, let's say, January of 2012, those would not be dischargeable because they were not timely filed. If you filed your 2006 tax returns in 2008, that's still not timely filed, but more than 2 years prior to the bankruptcy that you'd like to file on March 13th of 2012, so that tax debt would be dischargeable. There are a few other rules in addition to those. You have to have actually filed a return. If, for example, you did not file a 2006 return and the IRS assessed a deficiency, that deficiency is not dischargeable unless you then file a tax return. However, the rule I was just discussing still applies. You still have to file that return 2 years prior to your bankruptcy. So the simplest rule to take from all of that is file your returns on time. If you do have questions, because that can be very confusing, you can certainly call and speak to one of our attorneys. The next rules are a little more straightforward. The taxpayer cannot be fraudulent in any way on those returns. If there is any fraud, they're not dischargeable. The taxpayer can also not intentionally attempt to evade tax laws. If there is any fraud or intentional evasion, those debts are not dischargeable. When you're filing for bankruptcy, if you're required by the law to file a tax return, meaning you make over the personal exemption amount, you must have filed those returns for the previous 4 years. If for some reason, perhaps you're unemployed or you do not make enough money to be legally required to file a return, you would be excused from that requirement in the bankruptcy. However, you would still need to provide your most recently filed tax returns, which of course could technically be a few years old if you're not legally required to file. So if you still do have any questions, please feel free to contact one of our attorneys today. Thank you.